Okay, good afternoon, everybody. Welcome to Paul's Monday Market Update for Monday, the 15th of April, 2024. I hope you're all well. I hope you enjoyed the rather eventful weekend, which gives us plenty to talk about here. As always, just be great to know if those of you here joining us live, just confirm that the technology is working. If you can confirm that you can see the slides and you can hear my voice, that would make for a good start. And if you could do that, I'd appreciate it. That's excellent. Super. Thank you. Thank you. Just letting a couple of people extra into the room. As always, okay, the Monday Market Update, for those of you just joining us for the first time, Monday Market Update is a race through as much as I can get through in the next 25 to 30 minutes. We'll look at strength and weakness within the FX markets. Okay, we'll look at a few charts of interest, and then we'll have a look at the live markets. You are all very welcome here. Just remember that this is not it's not a signal service. It's not trade recommendations. It's just my view of the market, okay, which may be of interest or relevance to you based upon your own trading decisions. But as I said, you're very welcome here. And remember, as always, you are always responsible for your own trading decisions. For those of you who want to listen a bit more, okay, every Monday at 2 o'clock London time, I do an additional educational webinar for active trades. Today's one, 2 o'clock, is on about the inside bar pattern, just a simple price action pattern that you can learn and take away. You can either register on their website or use that QR code, okay, to get yourself through to the registration for it. So here we are. Let's crack on with the main element of our piece today. Okay, so this is the STAM. I appreciate that if you're new to trading or if you're new to the session, you might sort of maybe appear a little bit strange or a little bit overwhelming, but not really. Not once you've watched it for a few times. Okay, for a few weeks. All right. So it's the work I do at the weekend, which allows me to have an indication of where is the strength and where is the weakness within the FX markets and also indices and commodities. So here we are. We're into week 16 of the year, 15th of April, and I'm looking at where's the strength, where's the weakness, and what we've seen is the sort of the dollar, right? US dollar has battered its way back into the top of the pile there. Okay, not really a massive shock. Remember last week we talked about how we had indecision in with the dollar. We saw that across all of the majors. I was saying it's waiting for it to make its decision, and it's fair to say that it certainly did make its decision, and that decision was accelerated by what we saw over the weekend as well. We'll look at that on the live charts in a moment. But what we have there is, as you can see, is that dollar is at the top of the pile. Aussie dollar, okay, based upon when we were doing this, we were looking at is the second, okay, it's worked its way up there. And what that has meant is that sterling has basically dropped its way, okay, out of the pile from being top of the pile, a month or so ago. It's started to slide down the ranks, and I suspect that that slide will probably pick up pace as we come to the conclusion that the Bank of England is more likely to cut interest rates before the Federal Reserve these days, based upon the data in the UK and the data out of the US. Of course, cutting interest rates is rarely good for the country's currency, and so I expect that we will probably see the sterling start to continue that kind of weaken, and we'll be able to see that at the on the live charts in a minute. Euro itself is pretty sort of just, kind of moribund as well, as we'll see, especially when you look at it against the sterling. And at the bottom of the pile, okay, we've got Swiss franc and Japanese yen, all right, which would be normally would give us an indication that you're in a heavy risk on environment. And certainly if you were to look today, okay, at sort of, let's say, the last 24 hours in the FX markets, you'd be getting that because you'd seen that basically the yen has weakened considerably. And we'll once again, I put a little bit of that on the Discord and the Facebook group this morning, but I'll look at that on the live markets in a moment. Okay, and what you can see there is okay. There are kind of the risk on currencies have strengthened, and of course the yen has weakened. Now we're kind of in an interesting position here because of A, the price action that we saw at the end of last week, and B, of course, the events that went on over the weekend. And of course, I don't really particularly wish to make light of, what is undoubtedly, terrible situation for some people. But, markets are markets. Markets are going to do their thing. And I kind of put out just a little bit of my sort of thoughts on our Facebook and Discord about how, having the event happened on Saturday night to Sunday morning. And those of you looking at futures markets or crypto markets, those markets went wild after the events. And then, as I said yesterday, a lot of it was to do with how the Israelis responded. If they kept the cool heads and just basically decided not to go for an attack or an immediate attack, well, then basically people would sort of be, people would see that lack of escalation as a kind of as a sense of relief and would get a relief rally. Or alternatively, if the Israelis, went straight back out at them, then we'd probably see a wider escalation and invariably would see a complete risk-off mentality. And what we saw is that so far they've decided not to do anything. That, of course, could change as the week goes on. But what we saw from that is that, from where people were expecting markets to collapse again from the open last night into today, what we've seen is a bit of a relief rally, and definitely in the Japanese yen. Right, and we'll look at that in a moment to give you a great example for new traders about what we can expect when it comes to when you see a relief rally happen and occur. So we'll look at that in a moment. Never minding that, we have started to see. Okay, we started to see in terms of the American indexes, they have shifted to tactical shorts. Okay, for my particular STAM model, and what I'll be interested to see is how does the American market open this afternoon? Do they shrug off the weekends, okay? And do we get a little bit of a bounce from it? Or are we likely to sort of continue with that? Part of that will also happen is that, we are into earnings seasons, okay? This week's going to be an interesting one because, we had, we'll see in a moment. We had like JP Morgan, we've had Goldman Sachs today. I think we've got Bank of America tomorrow. But then the next 2 weeks after that, they're let's say the big heavy hitters in terms of the actual amount of earnings that are coming out. And I think that is going to have an impact in terms of, the direction for those American indices for the next quarter. So I think there will be jitters. There'll be jitters this afternoon, when these American markets open, but a lot of it will also be driven by A, relief rally, and B, what we're looking at in terms of the earnings. We saw actually, I think, I don't claim to be a fundamental expert, but JP Morgan's, their earnings and revenues, they beat, they beat their estimates, okay, and yet that wasn't enough to basically show up in a major sell-off, which we'll look at in a moment, okay, on that. But as I said, the US indices have switched, after a few months of really strong bullish moves. They've now switched to my model to like a tactically bearish model, okay, as has the Nikkei. The FTSE is mincing around about 8,000, all right, we'll look at that in a moment. But interestingly, okay, you can see that oil, gold, silver, we talked about this last week in terms of commodities. They were still very strong, but the price action on Friday, okay, was having an implication on that. And what we saw is, actually, let's save that until we look at the charts. It's easier to explain that when we see the live charts there. So relief rally in form, but dollar strength, Aussie strength, okay, sterling weakening, yen and Swiss franc remaining weak also in terms of what we're looking at with a view. Just to back up, this was the heat map for the S&P 500 on Friday afternoon. There's a sea of red there, isn't there? And that's literally, there was some fascinating moves there across all asset classes on Friday. It was a really interesting price action day, and I had a short on the US indices, okay, on Friday morning, all right, because it set up so nicely, but actually I was not in any way expecting it to sort of, to shift the way it did, but we'll look at that in a moment. But you can see that I expect what we'll do is this afternoon we'll get a relief rally green on that. That's what we'll be looking at. And as I said, we had JP Morgan on Friday. We've got Goldman Sachs today, and I think it's Bank of America tomorrow. Okay, and we've got there's some good bits of data coming out this week as well. But this is a chart of XLF. This is the financials ETF, and listen. it was, the kind of morning star. This is the weekly chart, gave us a great run. Okay, gave us a great run of the months. We got back up to the kind of recent highs there, but you can see for yourself there, okay, that that's kind of come off there, and that's an implication of the price action that we saw in JP Morgan. If you look at that, the way that worked, and also what we're seeing across a few of those big stocks. All right, so as I said, people will be interested to see, the fact that XLF was rising, the fact that most of those banks were rising was giving lots of people a kind of feel good factor that there was a good rally, it was a good move, we had a good bull trend there, but we'll have to wait and see over the next week or two to see if that's come back to an end. We're back down towards 40 on this, okay, and I'll be interested as always to see how does it react to that big number. Does the relief rally give it support, and we see a little bit of a move back up, or do we clatter it through if the numbers are not good over the next week or so? So it's what I would term as an inflection point. 40, got to make a decision, and so I'll be watching to see how that plays out there. Here's another interesting story. Okay, so at the weekend, of course, a lot of the let's say non-war news was about, of course, it was the Aintree Grand National here in the UK. And in particular, we're looking at Mr. Michael O'Leary, okay, head of Ryanair, owner of Ryanair, okay, and his love of horse racing, and and his horses in the Grand National and have been an Aintree, etc. But one other element that had basically went a little bit under the radar, but I certainly picked up on it, was the fact that Mr. O'Leary has a what would you call it? Okay, a clause in his contract, and that is basically if the Ryanair share price remains above €21 for 30 days, he gets a 100 million euro bonus. That in itself is enough to inspire me to want to short Ryanair. I'm sure all of us have had less than positive experiences of either Ryanair or Mr. O'Leary himself. But you can see you can see here, this is the weekly chart on the share price against the futures price, okay, and we can see from being down here, okay, back in September, okay, 23, we have basically, sorry, it's September 22, where we're back to 10 and a half euros. Nice bullish key reversal there, okay, ended that downtrend, and you can see for yourself we are up at 21 euros. But looking at that, it looks like somebody else read that news piece already, okay? I can see that people doing their very best to keep that beneath 21 euros to sort of deny Mr. O'Leary's 100 million bonus. I don't think anyone would feel too aggrieved by that, all right? So that might be just something you might want to watch over the next couple of weeks if you wanted to get revenge on Mr. O'Leary for any particular issues you've had over the last 20 years. You pay your money, makes your own choices. But I think it's definitely worth watching that chart over the next couple of weeks. Moving on to another one who is they've got their earnings late this week. I think it's Thursday. Netflix. Okay, so we've not really looked at it that much over the last year or so, but this is the weekly chart. And of course, those of you who can remember, 3-4 years ago, back in the misery of COVID lockdown, of course, Netflix share price went absolutely through the moon, to the moon, and invariably what happened then was once everybody was allowed out, Netflix share price just collapsed, okay, because everybody wanted to get out, and then of course they went into that in itself generated issues, okay. There was lots of let's say negative media coverage about Netflix and the way they were changing their business model. But to be fair to them, okay, to be fair to them, from this kind of double bottom low here, we'd had highs here at 700, okay, and had moved strongly down to the kind of 160 area, okay, 160, 170, double bottom there. You can see there actually, for what would you look at that for about the last almost nearly the last 2 years, it has been in an upwards move, hasn't it? And we find ourselves up above $600 there, and I'll be interested to see what do the earnings do? Do the earnings just give it that last bump towards getting back to these kind of highs at just in front of 700? All right, that's what I'd be looking at. Or does it do we get a rug pull if and when we find out that their numbers are not as good as expected? So either way, that is been a very good weekly trend. Okay, that's been working its way right. You probably had a little bit of consternation there, but it turned out to be a very nice bullish flag pattern, okay, which was finished with a nice bullish key reversal, bullish engulfing candle there. But you can see for yourself there, okay, the price action is just basically tightening up there. So I'll be watching to see how that plays out on Thursday. I think that might have been, was that the last? Yeah, it was the last chart and stuff for that. So let's switch across to the live charts and have a look at what's going on in the live markets. So just bear with me for a moment and we'll switch across. Okay, so I'm hoping that you can still hear my voice. I'm hoping that you can see the charts here. This is just my indices charts, okay, on there. I appreciate if you're new joining us, all right. So let's just what we have here is this is Dow weekly, Nasdaq weekly, SP 500, Russell weekly, FTSE, Nikkei, DAX, and oil. Okay, so just you've got a quick understanding of it. So let's clear these and start having a look at them. So where do we start? Okay, after last week, okay, and the weekend. So, but easiest one is probably start with the Dow. All right. So we talked about last week about how, having been in great trends, there was quite a few. We printed quite a few bearish key reversals, bearish engulfing candles. I thought we would probably drift. I thought we would maybe drift through earnings season and then people make a decision. But you can see basically, we took off last week. And in particular, if we go to the daily chart, we finished that. That is a daily chart, double top, second leg, bearish key reverse, bearish engulfing candle, and away we ran. And in particular, Friday, as we just looked at the heat map, we particularly ran away there. Friday, I kind of shorted here. This was, I thought, was just a great place for a short, and I think I got out about here for about 50 points. That was my target. It was 2-1 and stuff, and I thought fantastic. And then I was out for the afternoon and come back and bosh, we're down here. So there you go. Woulda, coulda, shoulda. But that's the nature of the gig. So this morning, what we've seen is, you can see that there's been a little bit of a relief rally on the 4-hour chart there, but you can see that's quite some considerable sell-off there over the last couple of weeks. All right, some real move there. My view would be, I think maybe I wonder if the relief rally will sort of take us up, up back into these moving averages, okay, around about 39,000, okay, and then I'll be looking, if we get a rejection candle, that would be giving me like a lower high for a next leg down. That's one of the scenarios I'll be looking at. That's one of the kind of trade scenarios I particularly like. But interestingly, if you look at Nasdaq, whilst it's bearish, okay, we had an bearish inside bar, which I'll be talking about, later. We're kind of still holding above 18,000. That's what I take away from that. Even though the price action hasn't exactly been really pretty for getting towards 2 months now, isn't it? We are still holding above 18,000. Okay, we're starting to basically flirt with the 50, the daily 50, and being beneath it, but we're holding for the moment above 18,000. I'll be interested. Is there anything in the earnings that basically cracks that to the downside, or is this support before a next leg up? All right, that's what you'll be looking at. S&P 500 was the same as Dow, namely that we'd had a hanging man, really, a bearish hanging man, okay, bearish engulfing candle, and as I said, I thought we'd drift a bit. I thought we'd do a little bit of a drift like what Nasdaq has done, but once again, you can see for yourself there, it's sold off. They did finish last week holding above the daily 50, and we can see there's probably a little bit of a relief rally here, but I'll be interested to see, how that plays out this week at the moment. And the Russell's the Russell's heading back to 2000 again. What a shocker! 2000's been a real pivot, for years now, for the last few years, okay, and having rallied our way up, placed our bearish key reversal, we kind of wouldn't surprise me if we drift back to 2000. Big round number is the magnet for the Russell. Looking a bit closer to home, FTSE, okay, having rallied our way up to 8,000. I mean, if you look at that last week, that was, we'd had I look at that as an indecision high wave candle, which is what we talked about last week. Lots of indecision candles. Then we printed, I look at that as another, bearish hammer, bearish pin bar. Okay, we are drifting back up to 8,000. I think that basically, if we look at it today, it would not surprise me if we went back up to 8,000. Okay, we just dragged our way, back up there. That's what I'd be. That's what I'd be particularly looking at, even after that. This is a 4-hour chart, 4-hour FTSE. Okay, we've done a bearish key reversal off the 8,000. No surprise after Friday's news. What we saw is that, what we saw, and this goes for all of those kind of indices, is that Iran came out and said that they gave the UN and the US 72 hours notice that they were going to do something. As I always say about trading, somebody somewhere always knows something, and because of human nature, they're going to use it for their own benefit, and that might have also been a contributory factor to the big sell-offs we saw on Friday. Okay, but you can make of that what you will. We look at the DAX. DAX has been, just in a fabulous trend, but it printed. Okay, it printed our, real very bearish candle there, engulfing candle there, and we followed through on that last week. And you'd look at that as that's kind of been a bit of an orderly sort of descent, hasn't it? After this is the daily chart, an orderly descent after the daily key reversal at the start of the month. Okay, and you look at a lot of them. It's literally. We started the Q2, with basically bearish key reversal, and we've just drifted our way there. Today, no surprise, there's kind of that relief rally, but on a daily chart, I'll be looking to see, does the 20, which has acted as support here, is it now going to flip to resistance, okay, and move down? That's what I'll be looking for in the DAX on there. Oil, you can see, we talked about it. This is the weekly chart. We talked about it, support at the 200, ground its way up, and was doing fabulously well. But last week we printed this kind of indecision. You might say it's a bearish hammer there as well. Of course, people are going to be concerned about what, if any, implications or escalations could happen, all right, with what happened over the weekend. Hence why, Friday's candle on the daily chart, I would see that as a double top with a second leg being a bearish hammer, bearish pin bar, right? We didn't drift down as much as I thought we might today. I thought we just maybe, but you can see for yourself, whilst the price action has it fell away this morning. Okay, it's not in any way near the kind of the sort of the strength that people might have thought. So look at gold. Gold is interesting in the sense that gold on the weekly chart has been just in a fantastic rally, getting into overbought territory. And then actually what happens last week is, on Friday, we end up printing this, that is it's a hammer, it's a bearish pin bar. If you look at the daily chart, you can see that's what we printed. If we go down 4-hourly chart, having been in a bullish week, look at that warmth, that's a real big, change. Now, is that an organic move, or is that just panic selling from people on Friday? Okay, just basically wanting to basically go to cash. Capital is a coward. All right, at the first sign of danger, it will run and hide. Okay, and it's the safest thing, which is normally the cash or treasuries, because normally you'd think most people would be buying gold if there was a war starting, but you can see for yourself the price action, how that's played, and today, this morning, it's not really, it gapped up, but it's not really, everybody's just sitting, coming to terms, wondering what's going to be the next move. Silver did the same, having had a great run up. Okay, printed last week, the bearish come up just under 30. I think I might have talked about this on one of the VTP calls, is that $30 getting towards that has been a very strong resistance level. Okay, for silver, I've just gone to the monthly chart here. I traded this one here a few years back. Okay, this is when we had the meme stock rally and everybody thought silver was going to the moon. I decided opposite, and we false break out of 30 and came down, and we got back up there, okay, up towards there, okay, on Friday, and then as you can see, so same as gold, it got completely sold off, and now everyone will be trying to work out what it's going to do, next. One of the interesting things that was useful on Saturday night was the fact that the cryptocurrencies, which were trading over the weekend, they just started to collapse on Saturday evening. That's what you're seeing there, okay? And that was a first indication that something was up, right? And we saw it, but once again, 60,000 seems to be holding us support, doesn't it? For all the Bitcoin bulls, it's holding us support. And actually, if I go down to the 4-hour chart, that's what we saw over the weekend, but we've actually, from being down near towards 60,000, we've rallied back up to 66,000. There's the relief rally in place for us there. So just an indication of that. All right, let's have a look at, we'll have a look at dollar, yen, and sterling. Okay, that's what we'll do today. Or as always, I'm just trying to fit in as much as I possibly can. I appreciate it's kind of a bit of breakneck speed, but that's the whole idea, to try and get as much as I possibly can across to you. So here we go. My dollar profile start with the dollar index. Bosh, weekly chart. This is, remember what those of you who were here last week were saying, indecision, all right? And it was across all of the majors, indecision, all right? But boy, we got some clarity there, didn't we? Bosh, dollar strength there, okay, off the back of the economic news last week, and you can see that has just rallied its way there, okay, towards the sort of end of last week. We were holding above the daily 50, holding above that daily kind of 103, 60, 103, 70 level, but that one, you can see that is just dollar strength going on there, and that's also being improved by ECB meeting last week. Okay, they inferred that they're going to start cutting rates. Bank of England, we've got a couple of meetings, and I think Mr. Bailey speaking, is it tomorrow afternoon? This week anyway, all right. And I think that people are now coming to the conclusion that the cuts in the Federal Reserve will be not as fast as they may well be for the Bank of England and ECB, and hence why we'll see euro dollar fall. We've seen sterling dollar fall. And also why we're seeing that kind of dollar strength there, right? So that's the nature of the game at the moment, okay? And we can see it on some of these other charts. If I go to euro against dollar, look at that last week, bosh, big bearish engulfing, okay? So normally I want to see big bearish engulfing or key reversals, at the end of an uptrend. This is us cracking through and closing. Okay, the interesting is this is we had the euro dollar is the lowest close for the year. Okay, so far shouldn't really be a complete shock. You can see that's the opposite of the dollar index there. Okay, we're putting that DTB 123 top. All right, now that normally this would be kind of bread and butter for me. Kind of a love, to short a daily top, but this was in front of the news, okay, front of the news. So you missed out on that, but that's the game you play, right? Managing risk. So, but that is just another reflection of dollar strength. And even if we look at Aussie dollar, okay, which is basically the Aussie has moved to number 2, okay, in the strength charts. It's still really last week, it's still sold off against the dollar. And that sort of just reinforces that, I love to see strength free weakness, but when the dollar's on a tear, trying to fight that is usually a foolish endeavor. Okay. And so that's what you can see there. That's the daily chart. Bosh. Off we went. Okay, off we went. So why would you fight that? And you can see it. Kiwi against the dollar here. It's the same story. Even dollar against Canadian dollar. Okay, bosh. And that's not a surprise. We're seeing probably Canadian dollar economy is not bearing up as well as certainly not bearing up as well as the US economy. And so you're seeing that basically that strength there, US strength, Canadian dollar weakness. Dollar Swiss franc even. Last week we had a little bit of a pin up. It's just blown through that. And now you've got to look at that weekly chart and look at it as well. We're going to drift our way to the 200 period moving average. That's what I'll be looking at. And that has we started out the year with Swiss franc as number 1, as I said, and all we've done is just basically trogged our way against that. That's just what's been showing up, that Swiss weakness that we've seen all the way through. Okay, let's just very quickly look at Japanese yen, because I just want to show you like a teaching example for traders. So this is my yen profile, and I've got them all across on the weekly. Oh, sorry, on the hourly chart. I do apologize. And what I want you just to be able to see is that how that relief rally, okay, has taken place. All right, overnight. All right, just look at that. Okay, bosh. It looked better on the 30-minute chart, but hopefully you can get the idea of that. We're just basically having expected markets to gap down massively and for yen to strengthen on Saturday night. By Sunday night, pretty much people had sort of realised that the Israelis weren't going to go on the war path, okay, straight away. They were going to basically hold their hold their council of a sort. Wait to see until we have that relief rally, and so that yen basically just got sold. So the yen getting bought up, yen got sold up on that relief rally. Will that continue this week? To be honest, it's too soon to know. We'll see what the American data is like, and the first bit starts coming out in half an hour. See what the American market open is like, and then see how the American markets react to some of those big earnings that are going to come out this particular week. But yeah, I just wanted to show that as a means to see what a relief rally looks like. Okay, all right, let's look at sterling. Okay, I'll just look at a couple of them just to finish off. So we said dollar is massively strong. Pound has slipped from top of the pile to number 3. Okay, so when I look at pound against dollar on the weekly chart, no surprise. Remember, we've just looked at the dollar charts, and that is just a broadening formation there. Okay, big bearish key reversal, engulfing candle. Okay, and also closing at the low of the year and closing for the first time this year. Okay, and primarily for 6 months beneath the 50-period moving average. All right. So my natural inclination is nothing moves in a straight line. So my natural inclination is that scenario would be we have a little bit of a pullback up into the averages, as always. Look if there's a rejection candle there, and then use that as the next leg down. That's what I always look at as a simple scenario. Okay, to see what could happen. Look at that on the daily chart, but yeah, you can see there. Okay, bosh, that's what last week happened, and and it's the 4-hour chart. We had a really lovely double top off the 200-period moving average. Okay, and you can see for yourself what happened there. No surprise, bit of a relief rally here, but interestingly, okay, watch to see how this 4-hour candle plays out as we go into the open of the US session. Euro against sterling is still as dull, all right, as it has been. Okay, just look at that. There's that's an inside bar indicator there, and you can see that's just dull. Okay, every time there's been a bit of fault storm with sort of euro strength, and then it just gets knocked back down. And daily wise, we've been back down beneath the 50 there. Okay, so nothing to get terribly excited about. Against the Swiss franc, this is the weekly chart. Swiss weakness, sterling strength. But look at that over the last couple of weeks there. Okay, as getting lots of wicks to the north. That's telling you that that sterling strength is coming to an end, and maybe we're getting a little bit of maybe not, if not Swiss franc strength, it's just not necessarily maybe as weak. Okay, just looking at the price action there. So I'll be looking to see, is that going to be a flip? Is that going to roll its way over? Okay, based on sterling weakening a bit and maybe Swiss franc just holding its course. We shall wait and see. Okay, we'll draw it to a close there, ladies and gentlemen. I appreciate we overran a little bit. As I said, this is always a bit of a race. I want to just try and fit in as much as I possibly can, okay, in the sort of 25, 30 minutes. Nevertheless, I hope you found that useful. I hope that's given you a little bit of insight. I hope that's given you a few things you can take away and look at for the week ahead. As I said, at 2:00, I'll be doing a piece on inside bars for active trades. Those of you on the VTP, there'll be other VTP calls this week. For the rest of it, I hope you have a fabulous trading week as always. Okay, keep your powder dry and manage risk accordingly. And I will speak to you soon. Take care, everybody. Cheers.